Uganda is progressing very fast, negotiating sharp bends at breakneck speed. On the Drift podcast, we put that growth in perspective.
Now, there is another category of people that are exempt, okay, for purposes of, attracting investment. There is what we call industrial parks. I think you've heard of industrial parks.
I've heard of industrial parks.
Yes, we have Namanga, which is one of the most popular ones.
Under Uganda Investment Authority?
Yes. Now, if you are an investor, okay, and you put up warehouses in an industrial park, and you invest at least 50 million USD if you are a foreigner.
50 million USD?
Yes, that's quite some money. Okay, 10 million if you are a citizen of Uganda, okay, then you are also entitled to an exemption. Okay, let me say that again. You are an investor.
I'm thinking about the numbers.
Yes, you are an investor. You invest in leasing or letting out facilities in an industrial park, and your investment is at least 50 million US dollars or 10 million US dollars for Ugandan. 50 million is for
50 million is for a foreigner?
Yes.
10 million UGX is for a Ugandan.
USD. 10 million USD for a citizen. Then you are qualifying for an exemption. Okay, and you can apply, also show evidence of your investment. I put up this warehouse, okay, in this industrial park, and you'll be entitled to an exemption. Then there are operators.
How long is that exemption? 10 years still?
Yes.
Okay.
Okay. Then there are operators. Okay, you are operating in an industrial park as well. You're an operator. If you go to Namanga, you'll find there's so many people operating in that industrial park. So if you are an operator,
these are the people who understood the gymnastics.
Understood the tax gymnastics and went and invested in those particular areas. So if you are an operator in an industrial park, okay, and over a 10-year period, okay, you're able to show government that have invested at least 10 million if you are a foreigner. 10 million USD. Foreigners, 10 million United States dollars for a foreigner, or 300,000 USD for a Ugandan, for a citizen.
Okay.
Then again, you are entitled to an exemption. So this time you'll apply, and it is the commissioner to give you the time period for your exemption. Okay, but you must show that at least you have invested, okay, invested at least 10 million USD.
Or 300,000
over a period of at least 10 years in an industrial park as an operator, and you'll be entitled to the exemption. So this time around, you're applying to the commissioner, but it's not like the commissioner is the one to say, I give you, I don't give you. No. For as long as you meet the parameters, you're entitled to your exemption.
You'll be granted the exemption.
You will be granted. So even if you feel you actually qualify, you can account for it like someone qualifies. So that if your IRA comes and says, why aren't you paying tax? You say, oh, I'm exempted under this section. And indeed, if you confirm that you're exempted, then your income will be exempted.
Wait, Jolly, are you telling me that someone can assume the exemption in that case?
If they think. But if your IRA comes and finds that you don't, then that's a different story. Because this exemption is granted by law.
Ah, okay.
Okay? It doesn't, unlike the other one of 80%, where they say apply.
Apply
this
before.
One, the law has given it to you. Okay, the law has given it to you. So if you think you meet the criteria, then you can.
And you have the evidence to back it up?
And the evidence to back it up. The next one, okay, the rates are now going lower. I know the other time you're saying 50 billion USD, 10 million.
300K, that's also still quite some money,
Yes, so now there is another exemption for people in business, okay? So if you are a citizen of Uganda and you invest at least 150,000 US dollars and you place your investment up country, not in Kampala.
What is up country?
Up country means at least 50 kilometers outside Kampala.
Mityana is up country.
Is it 50 kilometers outside Kampala?
I think it is.
Your guess is as good as mine.
Okay, Muvende is up country, certainly.
I've never measured the kilometers, but I would think Muvende would be outside, 50 kilometers outside Kampala. So for as long as you place your investment 50 kilometers up country, okay, then you are entitled to an exemption.
You go as far as Iganga, as far as Muvende.
But then it can't be Entebbe or Jinja because those are also looked at as cities or towns. Okay? So it must be up country. So if you place that investment and it's at least 150,000 US dollars. Nakasongola.
I'm trying to.
Yes. So it's at least 150,000 US dollars and it's in these particular businesses. Okay? It's It's not that anything you put out there.
There's a cap on the business
There's a
type.
cap on the types of businesses that you can engage in.
Okay.
So I'm not going to mention all of them because there are quite a number.
But you can drop some,
But I'll
certainly.
drop some. So commercial farming, okay, agricultural processing, okay, you're manufacturing materials for printing and publishing, you're manufacturing sanitary towels, you're manufacturing diapers, leather products, furniture, glassware, mattresses, a lot. So medical supplies, chemicals for use in agriculture. So there are particular businesses that are
Actually, all the
contained in
businesses,
that
when you really
particular
look at them,
no,
they
it's
are.
not all the businesses.
And what I'm saying is, when you look at all the
Manufacture of
businesses that
goods,
you've
I'd say.
mentioned,
Yes.
there's a way they are contributing to like more businesses.
Yes.
Because I think agro-processing,
Yes.
that is supporting the agricultural
yes,
sector, like in a
agriculture
very
sector.
direct sense.
Yes. Yes.
And
for as
even
long
some of
as-
these other ones that you've mentioned.
Yes, so they're supporting different industries, especially small scale industries in those particular upcountry places. So you'll be supporting the people in that area, because if you do commercial farming, for example, you go into poultry, you're going to be supporting for planting maize, planting soya. So of course, that is the outlook that government was looking at while granting this exemption.
So even for that facility, even for that exemption, it is still 10 years?
No, for that one, you assume it because it is in the law, it is granted by law. Okay? So any income that you earn from that particular...
As long as you're fulfilling
Yes.
those parameters
Yes.
that you've mentioned.
Yes, $150,000 investment,
50 kilometers out of
up
Kampala.
country, it's blessed up country, and you're in those particular businesses that are contained in the law. Then you assume that exemption because it is granted by law. Okay? So that is business that is
Interesting.
exempt.
Okay.
So of course there are also other organizations that are exempt from income
Which
tax.
ones?
Of course, religious institutions, because government believes that they're not profit making.
Online, that's been a thing, you know.
Yes.
Like,
and also the
Ugandans have been saying, the men of God. And the law is clear, you know.
Yes, men of God are earning a lot of money, and I know there's sentiments out there about this, but it's in the law. If we can lobby and say, no, men of God are earning a lot of money, we should tax them, maybe the parliamentarians will consider it, because as stakeholders in this government, we can also bring our proposals out there. But for now, the law exempts religious institutions that
What
are not
exactly
making
is exempt? Because I understand that at the most recent taxpayers appreciation dinner,
Yes.
we actually saw a religious facility being recognized as one of the most ardent taxpayers in the country.
Yes. So what is exempt then is the type of factory that they get for purposes of carrying out the work of God. Okay? So that charitable nature is what we are looking at. Okay? So for that income that is not profit and that is from charitable activities, it will be exempt. But if a church decides to put up a commercial building, because there are churches that actually have that much money, they're able to put up commercial buildings. There are people that rent from church, people that pay their rent
church house.
to Diocese of Uganda. Yes. So if you're paying rent now, church has gone into commercial activity or business activity.
Church is making
Then-
business.
Yes. So now when church decides to engage in a bit of business, then certainly they will have to pay tax.
Okay.
Okay, so other organizations that are exempt, of course, what we call listed institutions, these are institutions that are not primarily profit-making in Uganda. Things like UN, things like World Bank, things like IMF. Of course, they have offices here, they carry out some activities here, but they do not pay tax in Uganda.
There is an understanding, and you could correct me if I'm wrong here, especially among the civil society world,
Yes,
that like NGOs
yes,
are tax exempt.
yes.
Would you care to explain? Break it down for us. Give us clarity.
Yes, so NGOs, yes, are exempt from paying income tax because ultimately they are not profit-making institutions.
All NGOs?
Yes, so for as long as an NGO then moves into business activities or is unable to account for their income, then that is when URA will come in. But ultimately, URA believes that NGOs are not in it for making money. But you see, when I was talking about those that are given a blanket exemption, I didn't include NGOs because they will have to apply for that exemption and confirm to URA that indeed the activities that they are carrying out are NGO in nature. They are not profit in nature. And that is when they'll be given that exemption. It's not granted as a fact that, oh, I'm an NGO, I don't pay tax. So you have to apply to URA and show them your activities and show that these are non-profit making activities. And then once URA confirms, then they will be able to grant you the exemption, because ultimately income tax is paid on income generating activities that have a profit element. If someone is not making any profit, then ultimately you cannot charge them income tax, because they will not have any profit from which they can actually pay that tax. So other institutions or organizations that I can mention, maybe I'll say professional bodies, okay, because we look at them as organizations or bodies that are here for a particular purpose that is not profit in nature. When I'm paying my fees to the Uganda Law Society is not in a business-making entity, so that will not be subject to tax. Of course, sports associations.
So while you, the lawyer who is running your chambers,
yes,
you get to pay tax.
Yes.
You're expected to pay tax.
yes,
Uganda Law Society,
yes,
the body, the
Yes.
professional body that you're subscribed to is
yes,
not.
is not. Sometimes something applies to
Same thing with the
CPA.
engineers.
Yes, same thing with the engineers, the accountants, okay, the ISPAL, all those bodies that are professional in nature are not expected to be generating profit, so they're not expected to pay tax.
But
So,
the professionals,
yes, the professionals,
expected
of course,
to.
are paying tax because they're making money. Of course, when you're a lawyer offering your legal services, you're definitely offering them for money. So another institution, National Medical Stores, is also, of course, not subject to tax because of the work that they do. So all institutions in that nature, they're not profit-making institutions. They're set up for a particular purpose. Then as long as they're recognized under the law, then they will not be subject to tax. So we've looked at employment income and people who are not subject to tax on their employment income. We've looked at business income and people who are not subject to tax on their business income. And of course, organizations that are not subject to tax. So that is how income tax operates.
It's a very interesting dynamic. But of course, now there's this small matter of rates.
Yes.
What do the rates look like? Like,
Hey.
who pays what?
Pays what?
Hey. When
Okay.
it comes to the individuals who are employed,
Yes. How much tax?
and it is pay as you
Yes.
earn that you are contributing,
Yes.
how much of it are you contributing? If it's a business, what is the outlook for the person who is actually running business? Rate. Let's talk rates.
This thing in Uganda where you find that employees are usually not that bothered about tax. I think because when people are negotiating their contracts, they negotiate based on what do I take home? What is my take home? Okay? So because we have an obligation that is imposed on employees to be the ones to collect the tax, there's a feeling that employees don't really feel, the tax that they pay. But I think people need to stop thinking through that mindset and know that ultimately when you're employed, you're paying tax. That if there was no tax component, you'd actually be earning much more than you're actually earning. So we should be bothered as employees about how much tax we pay and how that tax is, of course.
I am bothered. I'll tell you that.
Yes. But most people, because they look at their take home, you find that it's mostly people in business that complain about taxes. People that are employed then tend to sit back and say, okay, taxes affect business people. But even you as an employee, you're paying.
No, I'm bothered. Like
So-
every time I look at my pay slip
Yes.
at the end of every month,
Because you look at your pay slips. Some people don't look at their pay slips. Some people go to work and they know, end of the month, I'm getting 1 million. And that is it. They don't realize that, if there wasn't tax, I would be actually getting more than 1 million. So I think employees need to start thinking about how much tax they pay and make sure that their taxes are used in a proper way. But what are the
100%.
rates
Let's
that-
get inside
that
the
are
rates.
applicable?
Mhm.
When you're an employee, like we say, 235,000, government
Nothing.
says no, you don't pay tax. Now, if you earn between 235 and 335,000 a month,
Okay.
then you're going to pay 10% of your income that exceeds the 235.
Anything above 235.
So if I earn 300,000, let's say, in a month, we first remove the 235 because remember, every Ugandan needs 235,000 to survive. So first remove the 235. Whatever is left then is subject to tax at a rate of 10% for as long as it doesn't exceed 335. Then you earn between 335 to 410,000. The rate is 20%. But also you first remove the 235. So if you're earning 400,000, you first remove the 235, then the balance is subject to tax at 20%. If you earn anything above 410,000 a month,
410.
Yes, 410,000 a month and above, then your tax rate is 30%. So 410, 500, 800, 10 million, 20, 100 million, whatever you may be earning, your tax rate is 30%. But
Clearly, the higher you go, it doesn't get cooler.
but we also first remove the 235,000. And the second but, if you exceed 10 million in a month, you add a little bit more on that extra.
Like if you're paid more than 10 million a month.
Yes, you add a little bit more. So for 10 million and above, then you will first be taxed. Let's say you earn 20 million a month. You're employed, you're a director somewhere, okay, you have a big position somewhere, or you're a senior software engineer, and all those people that have those special skills tend to be paid quite some money. So let's say you earn 20 million a month. We'll get your entire 20 million and you pay 30%. After removing the 235, you first remove your 235. Okay?
Okay.
Then we get the balance and charge it tax at 30%.
Okay.
Then we come back for the extra after 10M. So which is the extra 10M that you're earning, okay? Because you're earning 20. So the entire 20, remove 235,000, we charge 30% tax. Then we come back for the extra 10M and charge it an extra 10%. So some people like to call it the 40% bracket, but it's not a blanket 40%. It's not a blanket 40%.
So consider
basically
I can't work category.
So let's
And
say
yet
you
I'm
earn-
working towards starting to,
Yes.
be in such situations.
Yes, to be
So-
in the 20 million situation.
Yes. So what you're saying is
If you earn,
you get this 20, you remove 235.
Yes.
The threshold that
Yes.
is
given to
an
every Ugandan.
unexpected amount for a Ugandan to
Yes.
survive.
Yes.
And the balance 19 and something.
Yes.
You subject it to 30%.
Yes.
Then you're like, okay,
Then we come back and say, but you exceeded 10M in a month.
the 9 point something.
10M extra, because remember you're earning 20 million.
Remember you deducted 235.
Yes, oh yes, so you deducted 235. So the extra that exceeds 10 million, okay, is subjected to another 10%. So people like to call it a 40% bracket, but it's not 40% blanket. No. Okay, we first give you a threshold, first tax 30% on the whole, then the excess. Okay? The excess is what we tax at, an extra 10%. So that is a tax rate for employees. Then we have the tax rate for people in business, because businesses are also taxed differently.
Jolly.
Okay?
Uganda is progressing very fast. Negotiating sharp bends at breakneck speed. On the Drift podcast, we put that growth in perspective.
Uganda Revenue Authority, developing Uganda together.